have been asked by complete strangers which mutual fund scheme to invest in or which stock to buy. I've been asked these questions far too many times. Every time I mention to somebody that I come from banking and finance background or have background in wealth, the first question that I'm asked is, so which mutual fund are you recommending? My counter question to these kind of questions is always, so the tip that you're asking, is it going to be a part of your strategic asset allocation or your tactical asset allocation? And I get weird looks. So what is strategic asset allocation? What is tactical asset allocation? In fact, what is asset allocation? Asset allocation means that whatever money I have, investable money that I have, I allocate it or distribute it amongst the various asset classes, such as equity. Equity would be shares, equity mutual fund. It could be debt. Debt could be debt mutual funds. They could be bonds. They could be, I'll put fixed deposits, your PPF, EPF, Sukanya Samriddhi also in the category of debt. Then you have real estate. Then you have gold. All these four asset classes broadly are there, and they all have their own features in terms of which gives a higher return, which has a higher liquidity. Liquidity means you can convert it into cash when you need it as soon as possible. Which of them will be more risky? What is the time horizon, etc. What are these approaches I talked about? So the strategic asset allocation is based on the concept of financial goals. So all of us need to define our financial goals. Those financial goals can be short term. I want to buy a luxury car. I want to go for a trip to Paris. I want to renovate my house. Or those financial goals can be long term or medium term, such as retirement planning, marriage of my daughter's education, or it can be legacy planning. So all of them are financial goals, and then we invest our money or allocate our assets aligned to these financial goals. So based on the financial goals, you calculate what is the kind of return that you need to make on your portfolio, and then pick and choose the various asset allocation. Strategic asset allocation may require some rebalancing from time to time, but broadly the overall structure remains the same. Opposed to strategic asset allocation is tactical asset allocation. Tactical asset allocation or dynamic asset allocation is suitable for seasoned investors. They are meant for people who have huge amount of investable surplus. Their financial goals are taken care of and or are being taken care of by someone else. And tactical asset allocation is okay if the primary objective is to have a risk adjusted return. That means you're adjusting your returns with your risk. You know, what kind of asset allocation you do ultimately would also depend on your risk appetite. That means your willingness to take risk. If you're a kind of person who has an anxiety attack every time the markets go up and down, trust me, for your own peace of mind, it may make sense to go for a more conservative investment. The stress of it is just not worth it. Work harder at the job that you're good at and earn more money there. That may make sense. Whatever be the situation, asset allocation, planning your finances is a very important part. I mean, I may have crores and crores of property, but if I just need 30 lakhs for my daughter's education, I can't just sell one bathroom and get that money, right? So I have to think strategically and may take tactical calls here and when I get a excellent opportunity. Markets are all time down, and yes, I have some investable surplus which is there with me. I'll invest that money and maybe reach my financial goal faster. So it's a combination that has to be there. The bedrock of any financial planning or wealth management has to be asset allocation. So this was a small starting of the session on personal finance and wealth management. We will be looking at more such topics in the coming days. Do not forget to subscribe and do join me in our future sessions. Thank you.